After the disaster of the Great Depression in the US and the Second World War, a new global order emerged and a new set of institutions were created. But now, after the crisis, people are looking more to Asia to provide some guidance or model for sustainable growth going forward. And as the economic center moves from the west to the east, global governance needs also need to move in the same direction.
Partner, the Islamic Banking and Finance Institute Malaysia, also known as IBFIN. Get all recipients to kindly stand by next to the stage for a group photography afterwards. Thank you.
So you see that from the sense how you feel it as a domestic consumer, but also the way industry is operating. Now the challenge will come is when we interface with the global market, and you will see that challenge, and you've seen that challenge, for example, in a country like Singapore, which is, in a sense, to some extent, moving into a recessionary phase because it's very closely linked to those international markets. We are somewhat protected, largely because of the the ecosystem that we're operating within Asia itself. So a lot of our trade is within Asia; those are growing markets. So I'm optimistic. The big next challenge is to move into a high-growth economy, and the plan is to try and do that by 2020. And some of the discussions that we'll have today are really about that. You know, how will we do that? What will be the challenges, and how do we create a dynamic ecosystem?
Besides, in fact, the regulator, the supervisor, they meet here in Asia, in Southeast Asia, very close together. They are very close together. They meet every time when there is a problem. That's why if something happens in Asia, they will inform each other. Especially now, Indonesia members of G20. I noticed that in G20, all the supervisory activities are the same all over the world, are the same, and also in Asia. So now become more, the government or the central bank now become aware that they need to collaborate with each other to make safety, because one country has problem, the rest will there's a contagion effect.
Using intensive agriculture, changing farming practices, or buying food, income for the people.
My view, being in Malaysia, is that the likes of the Tun Razak Exchange would give us a step function jump in our ability to compete in the global financial markets. So although we have a strong system here, a stake in the ground that says we're really open for international business, the exchange would free up potentially huge capital inflows into the country. As a result of that, we increase our chances of becoming a higher income status, because we're trapped very much in the middle income economy, and the speaker you referred to actually spoke about that. This gives us that step function jump to move into those sort of markets, which then has a trickle-down effect to some of the areas that you're talking about in agriculture. I mean, just look at the history of Malaysia over the last 50 years. 50 years ago, 50% of Malaysia, which was largely agricultural, and 50% of Malaysians were in poverty. Now, currently, as of 2012, only 4% of Malaysians are actually technically below the $2 a day benchmark level. So in a sense, it's been a huge development And services, professional services, financial services, insurance, is a real catalyst for that type of development. And I think that's important that we look into those areas, because what you're wanting essentially for any developed economy is free capital flows and investment and markets that are sustainable.